Many people that come to this space have never traded, bought, or held equities. And unfortunately, some people are learning the hard way that altcoins aren't equities, and equities are definitely not altcoins. Welcome back, everyone. We are going to switch gears away from the typical FUD and noise. I thought that this post, as soon as I saw it, I was like, all right, you know what? Let's do a clip on this because before I got into Bitcoin, I used to purchase equities. And yeah, there is a big difference between shares in a company, right, and altcoins. A very big difference. Anyways, we're going to dive into this by looking at a tweet, I should say a retweet from Pleditor, great Bitcoin account. You should definitely follow it. And here we go. At Wall Street's Bets Bros finally learning the hard way that companies filing bankruptcy aren't bullish. And yes, I will have a story of my own to share at the end of this because indeed, when I first started buying equities, I did not understand what I was doing, and I got wrecked in equities, and I'll explain that after. Anyways, I was able to learn after that and then became very successful at buying and holding equities, but that's neither here nor there. I had to get wrecked. And learn. Anyways, not saying that everybody has to go through that route, but I did. Okay, I had nobody to teach me about equities. Nobody in my family had ever bought or sold. I shouldn't say that. One person in my family bought shares of some garbage mining company that went, not Bitcoin mining, just regular mining, right? Like they were mining uranium or who knows what, gold, silver. Anyways, it got wrecked. Okay, anyways, enough about that. We'll explain that all later. So here we go. All right, so bankruptcies aren't bullish. Yeah, I think we kind of know that. So let's dive into this. So we got this tweet out of Phenomenon, and here we go. He's at Fidelity and Bed Bath & Beyond, right? So he's kind of calling them out, and he's saying, what do you mean expired? How can shares held in cash account expire? So cash account is a type of investing account. And it doesn't, what that means is that if you buy and sell shares out of a cash account, all that means is that you get no tax benefits, right? Unlike an IRA or something along those lines, or a 401k. There are certain tax benefits to trading in those accounts. So anyways, I just want to explain that difference. So here we go. Can you please explain what is going on with Bed Bath & Beyond to the masses? Otherwise, thousands of complaints will be logged at the SEC. So Fidelity responded and goes, hi, shares of Bed Bath & Beyond have been delisted. This security has been deemed to have no stockholder equity. It is now considered worthless. So remember, equities have investor protections, but they can also be delisted off the market. So if you don't sell your shares in time, they will be worth zero and you will not be able to get rid of them, which we'll get into that after. There will be no future distributions, and positions have been removed from shareholders' accounts as of October 18th, 2023. So this is where the crypto bros start to learn about equities. So Phenomenon writes back and goes, they can just declare shares worthless and poof them in a cash account? Fidelity is about to have one of the biggest withdrawals ever. No, they're not. I thought South Park was a parody. No, it isn't. At SEC, is this legal? We didn't sign, and they can just remove shares. Nobody gives a shit about your signature, bud. That's right. They can just remove the shares, okay? Welcome to equities. Altcoins are really the Wild West. They still are, and I shouldn't even just say altcoins, but this whole entire space is still the Wild West. You see, with equities, right, you're dealing with quote-unquote regulated markets, number one. Number two, there is entire legal infrastructures built around equities, okay? So essentially, shareholders have some type of protections, so to speak, built within the framework. Now, I just want to point out, even though there are legal constructs, that doesn't mean that you can't get quote unquote rug pulled in equities, right? Because there are different quality equities, right? Like I'm sure that some people have heard the term blue chip stock. There's also, which usually means it's much higher rated. It usually means it's more secure. Quite oftentimes, blue chip stocks are very boring, very strong cash flows, right? Which means the business generates a lot of cash just in its regular operations. So for example, you could look at a company like Procter and Gamble, right? I'll use that as an example. It's very simple. Guess what? Even though I haven't shaven today, people around the world are going to shave every single day. Okay, so there's going to be no loss of desire for razor blades. And Procter and Gamble, actually Gillette, right? That was bought by Procter and Gamble. They have excellent cash flow, right? Because no matter what, you're always buying razor blades, you're always buying shaving gear and whatnot. But anyways, my point is Procter and Gamble is an example of a blue chip stock. Now, when you're taking a look at like mining stocks or something like that, or even pharmaceutical stocks where they're essentially waiting on the trials of a drug. Now, that doesn't mean that that company can't be safe or whatnot, but essentially their future is a little bit more unpredictable. And as a result, there's going to be higher risk involved. Okay. And as a result, there's going to be a lot more volatility in the price of that equity. Anyways, the whole clip is not to teach you guys about equities and stuff, but the point is that what happened in this particular case with Bed Bath & Beyond, it seems as though this was a crypto bro, okay, that went over, saw what was happening with GameStop and everything, and was like, hey, I'm going to follow them into this trade. Not realizing that, you see, when altcoins die, they become zombies. Even if they have no market, you can still hold an altcoin, and technically, you can still sell it. Unlike equities, you can't do anything with it once it's done, right? Once the equity is delisted, you can't sell it to somebody else. You can't monetize that thing. You can't do anything with it. Whereas altcoins, you can, and again, this is not advice because it's malicious, but you can technically hire marketing firms to, quote unquote, pump the dead altcoin, because even if an altcoin is delisted, it can still be bought and sold somehow. So anyways, that is one of the major differences. But let's take a look a little bit more, and we're going to talk about like what that means in equities. What does delisting mean? Okay, so here we go. Delisting occurs when a stock is removed from the stock exchange. It can be either mandatory or voluntary. That's right. Going back to the original poster's question, that they can just do that. Yes, they can. And you need to pay attention to the news. Some companies opt to go private or to get taken over by companies that want them out of the public eye. Stocks that fail to meet the exchange's requirements risk being kicked out and delisted. The consequences of delisting are significant, and some companies strenuously avoid being delisted. And yes, if you are a shareholder of a company that has been delisted where all of the shares have been dissolved, you get wrecked. Plain and simple. You get wrecked. And they don't, quite often, you're not going to be sent a notification in the way that you think, where it's going to explain to you the shares are going to go to zero. No, they're going to simply, you're going to get some type of a letter maybe that indicates that the company is going to be effectively taking itself off of the public market, which is supposed to signal to you that you need to get out of this position as soon as possible if you are still in it for some reason. A lot of times, altcoin promoters, they try to create this analogy between equities and shitcoins, because the reality is that if you can be convinced that you can have the same investor protections as equities, then you'll be a little bit more likely to take a risk on this. Now, granted, that doesn't work for millennials or Gen Zs, because most of them have never really dealt in equities. But it does work for boomers, right? Because boomers understand shares. So they're like, okay, so this is like penny stocks. Oh, no. It's much worse than penny stocks. Anyways, let's we're going to talk about how equities are different than altcoins. Stocks give shareholders voting rights as well as a residual claim on corporate earnings in the form of capital gains and dividends. Very big difference, okay? Because you see, when you purchase an altcoin, yeah, they create this simulation that, oh, well, there's a governance layer and you can use your token to vote. Yeah, but it was all created by a single entity. That entity has a pre-mine in most cases, and that entity owns the majority of the token. And especially if they did proof of stake, then that means the people who own the most shares or I should say most tokens, if they stake them, will just continue to own most of the tokens and continue to own most of the votes within that ecosystem. In that particular case, it's really not much different than equities, because equities are all proof of stake. If you own shares in a company that pays a dividend, right? Essentially, they pay you to hold the shares. Quite often, companies that pay dividends, it's either because they are extremely old, and they can't, or they don't believe that they can have a more effective use of money than give it back to the shareholders. In other cases, they do it because the company is extremely volatile, and they don't want that volatility to translate necessarily into the shares, so they pay you to essentially hold the shares. Anyways, you'll notice in altcoins, right, they try to do the same thing, right, with these staking mechanisms or yield mechanisms. But the difference is that there is underlying financial activity in an equity. In altcoins, there's absolutely nothing. It's just vapor markets. That's all. Here are some of the key takeaways about stocks, right? Stock represents ownership equity in the firm and gives shareholders voting rights, as well as a residual claim on corporate earnings in the form of capital gains and dividends. Individual and institutional investors come together on stock exchanges to buy and sell shares in a public venue. Share prices are set by supply and demand as buyers and sellers place orders. There's also another piece to this, which is called market makers. And many companies, when they first go public, they often have a market maker, which kind of essentially holds the price at approximately a sustainable level, so to speak. Why did I want to go over this? I wanted to go over this because in the altcoin world, as I just explained, so in the altcoin world, when your altcoin goes quote unquote dead, okay, which means all of a sudden just nobody's building on it anymore, right? There's no development, nobody's merging any any pull requests or anything like that. There's just no new code being written. There's no updates. There's nothing. So essentially, you're holding a zombie token. Okay. Now the difference is that with altcoins, okay, and altcoin enjoyers, they're used to essentially being able to hold this bag even if it's completely dead. And at some point, it may come back to life. Who knows? Maybe. Most likely it won't, though. That's the spoiler alert. Now, you see, in equities are regulated markets. So when something is dead in equities, it is dead. It doesn't become a zombie. Okay, it doesn't go and have some half-life in some other alternate dimension where all of a sudden it could come back to life if. No, it's dead. It doesn't work anymore. You can't do anything. And already you can't trade equities peer-to-peer. You already can't do that. So when an equity dies, your central location, the market where you were able to trade it, that's all that matters. And you no longer have that anymore. Okay, so really, this just becomes dead money. Now, before I wrap this up, I have to explain my story. When I first got into equities, okay, and I was 19 years old or 20, anyways, very long time ago, I thought, I wanted to do and imitate the best investors. So who did I read about? I read about Warren Buffett. I read about Charlie Munger. I read the book A Securities Analysis. I read the book The Intelligent Investor. And essentially what I had learned was you buy great companies at discount prices and you just continue to buy their equity. And over time, because they are great companies that produce a lot of cash flow, essentially your shares should rise, right? And you'll be able to sell them for a profit. But also as well, you want to find dividend paying companies, right? Companies that pay you to hold their shares. So I was going through all of this and I had found this company, okay, called Oakwood Homes, right? And I was reading about Warren Buffett, keep in mind. So I figured, right, what better thing to do than go and take a look at what Berkshire Hathaway, which is the company that Warren Buffett and Charlie Munger run, and see what they're buying. And lo and behold, they were buying a lot of home builders at the time, or they were looking into home builders and a lot of furniture manufacturing at the time. Okay, so keep in mind this is like late 90s, maybe even like early 2000s. So I buy these shares of Oakwood Homes. I'm very confident, right? I have done all of this reading about amazing investors, right? About essentially, and Berkshire Hathaway is buying this company, Oakwood Homes, which makes manufactured homes. And I'm thinking, hey, if I own shares of Oakwood Homes, the price of those shares is going to go up because Berkshire Hathaway is buying them. So I was very confident. Keep in mind, I hadn't realized that I had to keep up with the news about the company. So every quarter, these companies file quarterly reports. And it's not just the quarters. If there's a special event or something like that, a report is filed, which is then available to the public so that you understand what's going on and you're aware. So I didn't understand it, but essentially Berkshire Hathaway did indeed buy Oakwood Homes. But what they did was that they bought the company outright, they dissolved all the shares, and they took the company private. So that was my first lesson in equities. And my initial investment, which don't get me wrong, was not huge, but at that time and my age, that was the first stock I had ever bought. It went to zero because I did not sell the shares in time. The shares were delisted and I was never able to sell them again. And to this day, when I log into that original investment account, I see those shares still sitting there. You can't do anything with them. They can't move. They can't be sold. There is no market. There is no product. There is nothing. So, anyways, guys, for the people who have not been in equities and you hear about the GameStop story, you hear about the Wall Street's bets guys and all of this stuff, be very careful, okay? Altcoins will get you wrecked in a different way. You could end up with a zombie. Well, most likely you're going to end up with a zombie in illiquid markets. In equities, you're going to end up with absolutely nothing in no markets. Okay? So to the crypto bros, just you got to be careful, okay? And you don't want to be chasing a falling knife. Anyways, guys, let me know what you think. Sorry about the huge rant. It's just this is something that's very near and dear to me because there's a lot of nuance between the two things. And unfortunately, there are some really crappy people in the space that try to blur those lines and just try to make you think, well, if you understand this, you understand this. Anyways, guys, let me know what you think. Put it down in the comments. Like, subscribe, help us grow the channel. I'm going to catch you guys all tomorrow.